We see the technical terms in the income tax one by one, and you may call them as the definitions in the statistics. The first term we use in the income tax is person. Who is a person? According to section 2 subsection 31 of the Income Tax Act 1961, the word person is very wide term and embraces in itself the following. Yesterday I told regarding the person, there are 8 So the following are the heads included in the word person. Who is a person? Person is an individual. Individual is a person as per Income Tax Act. Suppose he is having income which is more than the taxable limit or taxable limit. If an individual is having income or the taxable income, or he is related something in one or any other way with the income tax department regarding the tax liability, then he is called as person. If your income is below the tax limit and you are not having any interaction with the income tax department regarding the tax liability, then you are not a person. First is individual. Second is Hindu undivided family. Hindu undivided family is also a person. Hindu undivided family is a person if that family is having assets, liabilities and taxable income. And head of the family is liable to pay tax and he is liable to assess the tax amount, total income, etc. That head of the family is called as Karta or manager. Hindu undivided family is a person, second. And third is partnership firm. Partnership firm is also a person because the partnership firm earn the income by use of partnership property, and the partnership firm has to pay tax to the government. Therefore, according to the Indian Partnership Act 1932 or the Limited Liability Partnership Act, they have to produce the account and they have to pay the tax if they are having taxable income. Partnership firm is the third one. And fourth is joint stock company. Joint stock company means it is maybe private limited company or public limited company. Is a person as per Income Tax Act if that joint stock company is having the taxable income. The next is association of persons. If there is association of person, that means cooperative society. Suppose you formed the association of person, that association of person is called as a person as per Income Tax Act because that association of person earns the income in one or any other means, and the association of person is having taxable income, then that association of person itself is called a person. This is the fifth one. And sixth is body of individuals. Body of individuals means it is also an association and it is a group of persons. Group of persons. In this group of persons, there are all natural persons. There is only one difference between association of person and body of individuals. That is, in the association of person, the members may be natural persons or artificial persons. But in the body of individuals, the members are only natural persons. Only natural persons. This is the point you remember. Then local authorities. The local authority, just like municipality, then Jilla Panchayat, water supply board, gas supplies, like that. There are so many authorities. All the authorities are also called as person if those authorities are having taxable income. Local authorities is the seventh one. And last is artificial judicial persons. Artificial judicial person. Artificial judicial person means that is the artificial. That is the artificial. Then they are the persons as per the judicial authorities. For example, your temple. Your temple. For example, the Tirupati Timmappa. Tirupati Timmappa is artificial judicial person. Tirupati Timmappa is having his own property, his own income. So that artificial judicial person, gods and idols, comes under the artificial judicial persons. Temples, mosque, gurudwara, whatever are there. The trusts are there. That income comes under the artificial judicial person. Okay. Tirupati Timmappa's property is managed and controlled by the trust. That trustee is the representative of artificial judicial person. Okay. So these are the 8 persons. These are the 8 terms comes under the person. Person means he may be individual, HUF, partnership firm, joint stock company, association of person, body of individuals, local authority, artificial judicial person. 8 points you remember regarding the person word. This is the first technical term in the income tax. Next term is assessee. Who is assessee? Who is assessee? According to section 2 subsection 7 of the Income Tax Act, assessee means a person. Person means you have to remember 8. Assessee is a person by whom any tax or any other sum of money is payable. Assessee means he is a person by whom any tax or any other sum of money is payable under the Income Tax Act. He is a person by whom any tax is payable means income tax is payable. It may be advance tax, it may be tax deducted at source, or it may be regular tax. That is called as any tax. And or any other sum of money is payable. Any other sum of money is payable means that may be penalties, income seized by the income tax department, or any other fees, etc. payable by the person to the income tax department. The first part is the regular amount payable in the form of tax. Amount payable in the form of tax is, that is, tax paid in advance, tax deducted at source, or tax paid as per the calculation. Other sum of money means because of your guilty, because of your mistake, if you pay the penalty, your income may be seized by the income tax department, or You may pay the extra amount, whatever sum you pay to the income tax department. You may pay the tax or you may pay the money if you are the person. In this case, he is called as assessee. Assessee means a person by whom any tax or any other sum of money is payable under the Income Tax Act. This includes the following. First is every person in respect of whom proceedings under the Income Tax Act has been taken. Who is a person? Every person in respect of whom any proceeding under the Income Tax Act has been taken. Proceeding means the inquiry. If the inquiry starts on any person, that person becomes assessee. That person becomes assessee. Proceedings. Income tax department people comes to your door, starts the inquiry. Whenever the inquiry starts, then you become the assessee. Okay. That is one case. And second case is you are a royal one. You are a royal person. Then you calculated the total income, calculated the tax and paid the tax to the government with proper channel, and then the income tax department check that or start their proceedings. Then you become the assessee. You become the assessee. This is the point you remember. And in this case, you have to see this one. For assessment of his income or income of any other person. First point you see here. The proceedings under the Income Tax Act has been taken because for the assessment of his income. His income means your income or the income of any other person. The income tax department start the proceedings on you people because of income of any other person. You take the example of this D.K. Shivkumar or any other persons. Any other person is having the income and that person gives explanation, and in his explanation he proposes your name. Then you become the assessee. That is the assessment of his income or the income of any other person. To calculate or to know the any other income, any other person income, the income tax department may start proceedings on you. And to determine loss sustained by him or such other persons. To calculate the income, first point. Second point is to determine the loss sustained. Whatever loss is sustained by a person, that loss is a correct loss or fake one. To know that, proceedings they start. This is the second point. Okay, this is a direct meaning of assessing. Direct meaning of assessing. In this case, proceeding starts, then you become the assessee. Because of proceedings, you become the assessee. This is the first point. This is called as A. And one more is here, to determine the amount of refund. To determine the amount of refund due to you or to other person. Three cases. In this point, first is to determine the income, to determine the loss, to determine the amount of tax and amount refundable. This is the first point regarding the assessee. Then second point is a person who is deemed to be an assessee under the any provisions of the act. He is not a real assessee. He is a deemed assessee. He is a deemed assessee. Because of another person, he become the assessee. For the other persons, he is a representative, that is deemed. A person who is deemed to be an assessee under any provisions of the Act is called as assessee. It includes the legal representative of deceased person. Legal representative of deceased. For example, the assessee. Assessee is having the income. Assessee having the income, and that income is a taxable income. The death takes place, then the income tax department is unable to start proceeding on the deceased person. Therefore, the legal representative of that deceased person become the deemed assessee. Deemed assessee. Remember this point. Once the assessee death takes place, the legal representative means the wife of that deceased or son or daughter may become the deemed assessee. Okay. Any doubt about this? This is the deemed assessee. And next is legal guardian or legal representative of the insolvent. Remember one more point I will tell you. Legal representative of insolvent. Once a person declares insolvency, then his property is handed over to the legal representative. And that legal representative is the deemed assessee. I'll give all the examples regarding this. Okay. Then suppose the minor is having the income. The minor is having the income. The guardian of that minor become the assessee. Minor is not considered as assessee because as per the Indian Contract Act, minor is incompetent to contract. Therefore, minor is not a assessee. The guardian of that minor is a assessee. Who is a minor? Minor is a person who is below the age of 18 years. Who is below the age of 18 years. That is called as minor. Okay. You remember this. The deemed assessee. I'll give you 4 examples regarding deemed assessee. Who is a deemed assessee? Legal representative of deceased person first. Then legal guardian of minor. Legal guardian of minor is a deemed assessee. Third, legal representative of insolvent person. Legal representative of insolvent. Then legal representative of lunatic person. Legal representative of lunatic. Who is lunatic? Lunatic is a unsound mind person. Unsound mind person means, who is unsound mind person? What do you call in our local language? Mad. Okay. These 4, legal representative of deceased, legal representative of minor, legal representative of insolvent, legal representative of lunatic are called as deemed assessees. Deemed assessee. Clear? First, in the A category, the real person is the assessee. In the second category, they are the deemed assessees. They are the representatives of other. One more thing I want to explain here. The legal representative of the foreigner is also deemed assessee. Is also deemed assessee. Deemed assessee. Next, third category is every person who is deemed to be assessee in default. He is also a deemed assessee. Third category also a deemed assessee, but this deemed assessee is not voluntary. He is not voluntarily deemed assessee. He is a deemed assessee because of his default. Because of default, a person become the deemed assessee. Deemed assessee. In the first category, the person who earned the income himself is assessee. In the second category, a person works on behalf of the another person, therefore he is assessee. In the third category, he become the assessee because of his default, because of his mistake, because of his negligency. Because of negligency, because of default, because of mistake, a person become the assessee. I'll give you the example. A person is said to be assessed in default if he fails to comply with the duties imposed under the Income Tax Act. A person is said to be assessed in default if he fails to compile with the duties imposed upon him under the Income Tax Act. He is called as deemed assessee in default. I will give you the example. You take my example. As per Income Tax Department, employer has to pay salary to the employee after deducting the income tax portion from that salary. Carefully hear this example. Employer has to pay salary to employee after deducting the tax from that salary. Suppose a lecturer salary, monthly salary is rupees 1 lakh. Lecturer salary is 1 lakh rupee monthly. Principal pay the salary to the lecturer, and that principal has to deduct the income tax on that salary, and remaining salary should be paid to the employee. For example, employee salary is 1 lakh rupee and income tax on that 1 lakh rupees rupees 10,000. Okay, let us take this example. Monthly salary 1 lakh rupee and his income tax on that employee is monthly 10,000. Okay, while giving 1 lakh salary to the employee, principal has to deduct 10,000 from 1 lakh rupee and remaining 90,000 should be paid to the employee. 10,000 is to be paid to the income tax department. It is the duty of principal or employer. Okay. Instead of deducting the income tax, total amount of salary is paid to employee. Then the employer has to pay the tax portion out of his pocket. This is called as default. This is called as default. This is called as employee, the deemed assessee in default. Okay, deemed assessee in default. The deemed assessee in default. This is the second point, assessee. Any doubt of these two, person and assessee? My battery is going low and power supply is not here. Therefore, I would like to wind up here only. And we'll see the next points in the next class. Okay, thank you.
you, sir.